All right, joining us right now for a reaction to the retail sales data out this morning and for a look at the state of the consumer is Bill Simon. He is the former Walmart U.S. president and CEO. And Bill, there have been some concerning things that we've seen over the last couple of weeks. First of all, we've heard from a lot of the retailers that the consumer actually started reining things in a little bit for the month of February. We know that there was some weird weather, some other issues that could impact consumer spending. But I just wonder what you're hearing, what you're seeing, and what you think is happening overall with the consumer.
Yeah, good morning, Becky. You know, it's interesting. If you really connect all the dots, I think the consumer might be turning a corner. I think there's a lot of things that are going on. You know, we've seen food prices, which have been historically high and high levels of inflation, first level off and maybe start to come down just a touch. Gas prices are coming down and housing costs have started to level. And those three things, they drive most of the consumer discretionary spending. And so if you connect the dots, the sales reports from Walmart and Target both actually reported improvement in their apparel and hardlines businesses. And those segments have been down, gosh, for 2 years. So, you know, maybe as the food prices start to ease and rents start to abate a little bit, there'll be some improvement in the discretionary categories. And if that continues, I think that's good for the consumer.
Well, that's a counter sort of message than we've heard from a lot of people. You think things are better than anticipated, that they're actually improving.
Yeah, I think they can be. I mean, if you really look at it from a pure consumer standpoint, the burden that high food costs, high rent, and gas prices put on them really changes their spending patterns.
Let's throw tariffs into the mix. How does Walmart and other big companies, how do they start dealing with the potential for tariffs? We heard last week that China was kind of pushing back on Walmart, saying, don't put any more pressure on our suppliers here. You guys are going to have to figure out with how to handle any higher costs that come through because of tariffs.
Yeah, well, that's the first thing, right? Try to negotiate with the manufacturers and figure out how to incorporate the cost, push the cost to them, or change the production method to lower the cost. A lot of the retailers or importers with the round of tariffs that went through in the last Trump administration found alternate, secondary, and even tertiary supply lines to try to move away from, you know, tariffing jurisdictions. And a lot of that's sort of being reignited. So there's a lot of that going on as well.
How successful do you think that will be? Because the last Trump administration, when they did put in these tariffs, a lot of it was picked up by the suppliers. Do you think that it will be as successful this time around?
Yeah, I don't think the suppliers will be able to absorb as much as they did the last time. I think they've been pushed to the limit. I think what you'll see is, you know, a bit of a split. Some of it goes to the suppliers. Some of it will change, you know, production location to move around the tariffs. And I think ultimately it'll get pushed into price. And then, you know, the ultimate arbiter of whether a tariff works or doesn't work is the consumer. Are they going to buy the product at the higher prices? Are they going to change to another product? Are they going to leave the category completely and go somewhere else?